ka whakamarama ngā whetū I te rangi me o tātou tānohi.
Kia ora koutou, my name is Brooke and welcome to Ngā Tahi. This is an additional episode to complement part 3 of our 3-part Matariki series. And this episode will be continuing on the theme of planning for the future, which is one of the pillars of Matariki. In our last episode, we talked about some of the resources that are available in the community for those who may be struggling with the high cost of living. And today I thought it would be a good idea to talk about some budgeting tips and some tools that those who are listening may be able to implement at home for themselves and their families to also help with the high cost of living. Today in the studio I have Tracey Phillips, who is the CEO of Henderson Budget Service. Kia ora, Tracey.
Kia ora, Brooke.
Thank you so much for taking time out of your day to come to the station and share your knowledge around budgeting and finances. So I understand Henderson Budget Service provide advice around budgeting, debt management, hardship applications, and they also provide workshops for staff at businesses. Is that correct?
Well, certainly we do a lot of one-on-one work with whānau around personal finances. We do a lot of workshops with rangatahi in the community and also some adult workshops. We have done a few, to answer your question, we have done a few workshops with employers, but that's a smaller part of the organisation at this stage.
Yeah. Can I ask how long you've been at Henderson Budget Service?
Sure, yes. I've been with the service now for 6 years.
Oh, wow. So what made you get into this field of work?
Sure. I have a background in a more corporate field. I've worked in telecommunications for most of my career and learned a lot of business skills, skills around working alongside people and also finance. And I was taking a break from that career and took an opportunity to become a volunteer financial mentor with Henderson Budget Service and just immediately just loved the work, became very passionate about it very quickly. And I'm really grateful that I've had the opportunity to sort of pivot and move into a completely new sector. And it's something that I find very rewarding and very enjoyable.
I find that quite amazing that you started as a volunteer and now you're the CEO of the company. So I guess over your time working with Henderson Budget Service, what would you say are the top budgeting tips that you feel would help individuals and families?
Sure. I think for families, the most important starting point is to really keep track of the money that's coming in and the money that's going out. Life gets really busy. Cost of living changes, prices change all the time. It's really easy to lose track of that. And you can find yourself sort of spiraling backwards quite easily without necessarily understanding why. So sort of just pausing and actually literally sitting down and tracking what you're spending for a period of time. Keep your receipts when you go to the store. Write it down once a week, maybe on a Sunday evening, sit down and tally everything up and just see what's coming in, what's going out, is a really key first start. Initially, you'd be wanting to focus on things like how much you're spending on your food, but obviously there's also regular things like your rent or your mortgage, your bills, your power, your water, and really getting a good handle on how much you need to be putting aside to cover all of those essential needs. You also then need to think about some of those one-off costs that are going to happen through the year. So, if you've got a car, you've got a warrant of fitness to think about. You've got registration. You've got potentially car repairs. You've got childcare costs if you have whānau, school uniforms, those kind of
planning ahead.
less regular but important, still essential needs, and really getting a full view of what all of that looks like, and then comparing that to what's actually coming in, and hopefully you've got a match there.
Yeah. It seems quite simple, but it's extremely effective, isn't it? I find, especially with food shopping, it can easily get out of hand. Do you have like any tracking apps that you recommend, or just writing it down would be fine?
Well, I think that the first thing when it comes to food shopping is actually having a plan. So, even to the point of doing a meal plan for the week. When I was a child and my family were struggling at times, we would have the same meal every day. Mondays would be a particular meal, Tuesday would be a particular meal. And it's a really good way of containing the costs. If you wander into the supermarket or you jump online to do your food shopping and you haven't got a plan, that's when you end up, randomly picking things up that then potentially go in the back of the cupboard and don't get used. So having a plan. Also, funnily enough, people joke about this, but it is true. Don't do your shopping while you're hungry, because you will always buy stuff that is non-essential, when you've got that kind of hunger going on. So just being a little bit more organised, I think, around planning for your food shopping.
Yeah.
I would also add that when you are shopping, it's really important to look at the cost per 100 grams for items. So, the top line label price between two particular, packets of biscuits or packets of toilet paper or whatever it might be, will give you a sense of the cost for that item. But if you take the time to look at the label underneath that shows how much you're paying per 100 grams, use that to drive your purchasing choice and the decisions that you make about which one you're going to buy.
And probably avoiding brand items, I think, and probably going for a cheaper option. And what about avoiding the eye level section of the aisles?
Yeah, I mean, absolutely. There's a real science to supermarkets, and we are kind of the little guinea pigs that are walking the aisles, getting entrapped sometimes in some of those deals that are placed in particular places. So just trying to, just be sensible and just really think about wants versus needs. That's a really key message, is that you've got needs that you need to buy, but try and ditch the wants, unless that you've got a special occasion or you happen to have a bit of extra money that week.
Yeah.
The other thing I'd mention is also being thoughtful about where you do your shopping. So sometimes the more convenient, smaller stores that are on the corner of, the street are convenient, but tend to be more expensive. So again, it's about planning and going shopping at the cheapest place that might not be the most convenient, but it's worth the effort to get to that one place. And the other thing is as well, not necessarily buying all of your food at the same store, because you've got some stores that will have specials on particular items. So if you've got the time, if you're able to do it, go to several stores and get the bargains from the different stores as well.
Yeah. And so you're talking about maybe going to a fruit shop instead of maybe the supermarket straight away, or even the meat store, or the warehouse, I know has got specials on
Warehouse is great. Perhaps I shouldn't be promoting, but the warehouse does have really good specials. Yeah. So, personally, I find it really helpful to go online and just have a little look around at who's doing what in terms of specials, and then use that to drive my decision around where I go to get my shopping for that particular week.
Yeah, I like that. And I just wanted to also add, Reduce to Clear also has some really good options. So sometimes I go there and they've got, cheap meats and snacks for the kids too.
Yeah.
Might be good for families.
Absolutely, yeah. I mean, there's always, particularly in like the bakery section, you'll always find some stuff there that's like, got to be eaten in the next day or two, and you usually get a really good discount.
Yeah. Debt. What are your tips for getting out of debt for those who are in debt?
Well, if you don't mind, I'd like to sort of bring that forward a little and say that that one of the things that we encourage with people that we work alongside is to try and avoid debt in the first place. And the way that you do that is, we talked about budgeting earlier on and how it's important to keep track of what's coming in and what's going out. If as part of that process you can put aside some money for those unexpected costs, then hopefully that might mean that you've got a little kitty there. That means that if the car does break down or suddenly you need something, medical costs or whatever it might be, you've got a little something sitting there that you can use. If you haven't got that there, that's when you're likely to go into debt to pay for that essential thing. So trying to avoid it is really important, and that does take some discipline, but you'll be really grateful for it. We find that often people don't understand how much debt is costing them, when you go and take out a loan or a credit card, you don't necessarily take the time to really understand how much that's going to cost you because you're all excited about what it is you're going to go and buy. You don't really take the time to necessarily understand how much it's going to cost you over the term of that loan. So really trying to avoid debt is key, number one. But we work with people every day who have debt's part of most people's lives. Not many people can buy a car without going into debt, so it's nothing to be ashamed of, but it's just something to manage carefully. And we work with people every day that do have debt, and sadly, debt can become unmanageable. So it's again really important that people understand how much that debt that they're taking out is going to cost them. For people coming into Henderson Budget Service who perhaps are in a little bit of crisis around debt, we can work alongside them to get a better handle on the situation. So debt can become very overwhelming very quickly, and it can become very stressful, and people can kind of lose sight of the way forward. And so what we will do is, we'll sit down with someone and ask them to share with us their whole situation in relation to money coming in, money going out, debt that's owed. And just by putting that down on paper creates an initial kind of bit of relief, because people go, okay, I feel like I can manage this now because I can actually see it. It's not just a whole lot of bills coming into my email or into my letterbox. And then we can help people to figure out how to prioritise that debt. So which debt do they need to focus on? We can sometimes work with the people that they owe money to and try and negotiate some new payment plans. At times, we're able to get some debt written off in exceptional circumstances. We also do quite a lot of work in making sure that when a debt was approved, when the debt was first taken out, that it was actually affordable. And if a lender has lent money to someone when it really wasn't affordable, we can work through a dispute process and actually sometimes get some of that debt written off.
Because they're legally required to make sure that you were in a position to get it first, right?
Exactly right. That's right. So we have many instances where we've been able to get some debt relief for people, either because their circumstances have changed and the lender has just been very empathic and supportive. Or sometimes it is because actually that debt should never have been approved in the first place.
Yeah. And I feel like people forget that there's also interest rates on top of the debt as well, right? So you can end up owing more.
Absolutely. So, I had an example that a colleague shared with me last week where someone had borrowed $9,000. They had paid $8,000 off of that balance, but they still had $9,000 balance because of all the fees and the interest that had been incurred during the lifetime of that loan. The person came in to see us and said, I don't get this. Why am I still owing 9 when I've already paid 8? And then sadly, if you've got taken out debt with a high interest rate and the lender is also applying monthly account fees and late payment fees and these other fees that you don't really think about, you can literally end up, having paid off nothing after 2-3
owing
years.
double.
Or owing double, absolutely, yeah.
So I guess branching off that, avoiding debt, what's your take on credit cards and Afterpay?
Look, I think credit cards absolutely have a place because if you do have a large unforeseen expense, it's really helpful to have the capacity to deal with that using a credit card. And if you're using a credit card using one of the main banks, the interest rates are not unreasonable, 10-11%, something like that. But when you start looking at some of the other credit products, you can be paying up to 29% interest on a credit card. So you've got to be really, that's huge. So you've got to be really careful and really thoughtful about which product you decide to take on. So that's the first thing in relation to credit cards. With credit cards as well, obviously, it's important to pay off as much as you can every month. So even though the lender will say, you only need to pay a minimum amount per month, you really need to be paying off as much as you can because if you just keep paying that minimum, the amount of interest that you're going to pay is just, exponential.
So you recommend paying like a little bit extra just to avoid some of the interest?
Absolutely. Pay off literally as much as you can afford because your goal should always be to have no debt. So if you do need to put something onto your credit card for a particular reason, do it, but then make a commitment that you're going to pay that off as soon as you can to save yourself money in the long term.
Yep. And I guess just on the topic of Afterpay, I feel like it seems like a small thing, but it's the habit that I don't like about it. I feel like it's teaching people that even though I don't have the means to pay for it now, I can still get it now and I'll just pay it off. And
yeah, I agree with you. You might be surprised at how much Afterpay we see in people's accounts when they come to see us because in their minds they feel like, well, there's no interest, so what's the problem? I'm not paying any interest, and I get that. But sadly, there's also very little in the way of kind of limitation to it. So, you can start off with one item on Afterpay and then it's 2 and then it's 3 and then all of a sudden you reach a point where the repayments are actually not affordable because it's just grown so much. So the advice I like to share with people, ultimately I encourage people to not use it at all. That would be my preference. But at the end of the day, we're working alongside people, and we're not there to tell people what to do. They make their own decisions. When it comes to their finances. But I will say to people, just if you really do want to use it, just keep one item at a time. Just do one, pay it off, get another one, pay it off.
Don't let it snowball.
Don't let it snowball, that's right. Because unfortunately, if you do reach a point where you start missing payments, that's when the fees start to kick in. So they will then start hitting you up with interest rate and fees, and then it becomes a little bit out of control. So for me, it's all about getting back into that mindset of saving for the things that you want to buy. So if you think about where we started today when I said, start tracking how much you need for your basic living costs. If you can put aside some savings every week, fortnight, month, however frequently your payment comes in, then that's your little savings reserve so that when you want to buy that, I don't know, new pair of shoes or concert ticket or whatever it might be, or you have a problem with your car that needs repairing, you've got a little slush fund sitting there that you can draw on, and you're not constantly resorting to debt to deal with that situation.
Yeah. So you would also encourage people to maybe live within their means, so they can, save up for those costs that come up.
Absolutely. And thinking about, again, holidays, car repairs, someone might want to save up to move house, get a different place, you might need to increase your bond. So, thinking about all of those future goals and then saying, how can I put some money aside to actually achieve that?
Yep. So I guess over your time at Henderson Budget Service and working with individuals and families, do you have a particular success story where you've worked with someone and you've seen it impact their life in a big way?
Lots. And this is why the work is so rewarding, because it's really hard to think of one example. There's a team of 10 of us at Henderson, and every day we're working with people and supporting them to achieve some really positive outcomes. I think for me, one of the most rewarding experiences is when you see a whānau actually start to change the way that they manage their money, and then you start to see that cascade through the family. So examples of where perhaps a mother has come in her 50s, she's had some debt, maybe the car's about to get repossessed, things are all a little bit out of control. We've put a plan together, she's been able to make some progress, and then, daughter comes in separately. Oh, mum told me to come and see you. Similar scenario. So where you're starting to see people learn new skills and start using different tools and making different decisions, and you start to see that being shared across the whānau, and you start to see people making different decisions about, I'm going to save up for this instead of go and pop it onto a loan. That's really rewarding. And then that the whole whānau and the next generation are going to be better set up for success, rather than falling into those habits that they've had in the past of just going to get a loan when they've needed or wanted something.
Yeah. I really like that, because I think there's this perception that financial literacy is something that just impacts the individual, but it doesn't really. It can impact the whole family. It can be intergenerational. Absolutely,
because you learn about money through what you see and hear from those around you. And some people have had the benefit of having parents who have shared and talked about money and taught them about money, and then there are others who've never had that. So if no one's teaching you, or you're not learning how, you're just going to do what you do. So it's really rewarding having the opportunity to get in and start having conversations with people and helping them to see how they can be doing things differently, and making some different decisions, and the benefits that then flow from that. And you're right, one of the reasons I'm so passionate about the mahi is that finance is not just about the money. It actually, if you're struggling with your finances, it affects your relationships, it affects your health, your mental health, your physical health. It's such a core thing. So helping people to focus on that and make, even if it's just some small changes, little baby steps, to start to see a bit of hope for the future, can really have a very broad reaching benefit.
I guess just to tie up our session, what would be the message that you would like to leave with our listeners today around budgeting and finance?
I think it's really important to talk about budgeting and finance. It's really important to talk about money with your family, with your friends. For whatever reason, it's got a little bit of shame around it. And people that come to see us quite often bring that shame and that embarrassment when they come into the session. And I would really encourage people to try to change that and to recognise that, times are tough for all of us. We're all struggling to make ends meet.
Yeah.
And it's okay to talk about that. It's okay to ask for help. And the earlier that you can reach out and ask for some help, the better the outcome will be. Don't leave it until the car's about to get repossessed. If you've heard some things today that have resonated for you and you think, I'd really like to learn a bit more about how I could put a budget together, or how I could, allocate money to those different costs so that I'm, feeling a little bit more in control. Reach out to a budget service. Moneytalks.co.nz is the perfect place to go. You can just pop your postcode in and it will refer you to your local service. It's a free service. Certainly at Henderson, we will work with you for as long as you would like to continue to work with us. There's no limit. It's free. It's non-judgmental. We're all about helping you to set your goals for yourself and then supporting you to deliver on those and sharing with you some tools and techniques that we think, you might find useful along the way. So I think it's about having the conversation, bringing it out into the light and not burying it, which is what, for whatever reason, many of us have done, for such a long time.
Yeah. I love that. Thank you for that closing message. Thank you again for coming into the station and just giving your time and your knowledge to our listeners today. Just to close off, I hope everyone was able to take away at least one new skill or tool that they could implement in their own budget and finances in the upcoming year. And I just want to emphasize that there are resources out there for you if you are struggling. There's organisations like Vision West, Henderson Budget Service, even our churches in the community. They're all there to help you if you need help. But it just requires you opening up and approaching them. I hope everyone has a beautiful Matariki with their friends and their family, and that you enjoy being in the present and celebrating this time and looking to the future and setting some new goals for yourself and your family. Ngā mihi nui.